fantastic to be with you at the FinTech conference here in Dubai. My name is Eleni Giokos. I'm an anchor and correspondent at CNN, and today we're going to be navigating risks in today's financial landscape, global financial landscape, and of course we've got fantastic panelists with us today to try and unpack what is on their mind, and importantly how they plan to mitigate some of these risks. So Siobhan, great to have you with us. You're from Universal Banking at Finastra. And I'd like to start off with you, and I'd like to ask all our panelists this fundamental question. What are the global risks right now that you're navigating? What is top of mind for you right now? I can think of many, from geopolitical to inflation to uncertainties, but I guess this is part of the cycle that we're used to.
Yeah, I would say, you know, you've already started to capture them. I mean, it's the economic, it's the political, it's, you know, even environmental impacts and risks that can impact us. So all of those, including technology, are ones that we're navigating today, both us from an organization as well as our customers and the broader market. So yes, we see inflation, we see you know, if you think about it, the crises and the black swan events that we've been having, and what we're seeing is that it's the ferocity and it's the frequency of those events that are, you know, are forcing us to change how we actually manage risk and be more agile in our approach.
Fantastic. Kfir, great to have you with us.
Thank you so much, and thank you for inviting me to the event. I think, you know, for Blackrock, we're doing risk since the beginning of the firm, so that's kind of our core business. If I'm looking at today's risks, you know, every night we're calculating risk for every kind of security and everything that is going on into the market.
What keeps Blackrock up at night?
Yeah.
We all want to know.
I would take the approach here, and I would say that the risk nowadays is not to take the opportunity. There is some major things going on out there, in particular with the technology that is hitting our markets, technology that they are changing the way that we do things, like artificial intelligence. Can I just ask you to adjust your
microphone? Because we're missing all your gems of wisdom.
Oh,
there we go. There
sorry.
we go.
Okay. So I think with the artificial intelligence that it's hitting, everything that we're doing has the potential of changing a lot of the business out there. So I think not taking the risk is the risk itself.
Not taking the risk is the risk itself. Interesting. Jim, welcome to the conversation. I'm sure you've all seen the name Jim O'Neill many times before. There are a few of you, both very significant. The one Jim O'Neill created the BRIC acronym, and we know that an S was added to that, BRICS. But you're focusing on something very different. You're the other Jim O'Neill from Bank of America, and it's really great to have you with us.
Thank you,
yeah,
and it's
so
great to be here at the Dubai FinTech conference. We are looking at risks in a variety of different ways. We're obviously seeing conflict around the world. We're seeing political change with half of the population globally voting, representing 60% of GDP. We're seeing trade disruption. Global trade decreased 4.5% last year. Yeah. And we're seeing some of the macroeconomic issues that everyone is on the panels and the previous speakers have mentioned. But markets are resilient. Markets have been resilient. And what we're seeing among our clients is actually quite a bit of confidence in the face of these risks. Global M&A volumes in the EMEA region are up 60% this year. So people, despite these risks, are doing transactions. And the capital markets are robust. The investment-grade bond markets are at an all-time high level, and it might be that a lot of issuers are trying to get away from some of these risks materializing later in the year and taking advantage of good market conditions now.
Well, I'm glad you're with us today, because I always like to do a health check on banks, Jim, and I want to know where we are right now. If I think about the interest rate environment, specifically in the United States, and we know whatever the Fed does, globally central banks tend to follow suit, and I think we need to sort of discuss this inflationary environment. Are banks' balance sheets able to withstand a higher interest rate for longer? So what's the health check right now?
Well, banks are essential to the functioning of any economy, and we're an integral part of every economy. And rates look like they are going to be higher for longer. That has some benefits for banks in the sense that the amount that we're charging interest versus what we're paying on our deposits, that margin is historically high, although it is declining over time. But banks have to be resilient, and higher rates are not necessarily the end of the world for banks as long as our charge-offs and our costs of lending don't increase dramatically. We've had historically very low costs of risk in the banking system globally. Last year that has reverted to more of a normalized rate, but by no means a challenge to the banking system.
Fantastic. Kfir, I want to welcome you to the region. It's great to have you with us today, and really important, sort of very telling about what Blackrock is planning. So I would like for you to tell us how important GCC has become for Blackrock, and also the Middle East. You're the largest asset manager in the world. We know you've got incredible pipeline happening in the region as well. Could you set that out for us so we understand what you're doing?
Certainly, this particular region is of very high importance to us. Certainly, we have members of our boards who served for many years from the region. So therefore, we always had the conviction, and we've been very involved here. We've been involved with the IFC from a couple of years. And we've been involved with many of our clients in this particular region, in Dubai, in Abu Dhabi, and the whole region. Certainly, last week announcements in Saudi, they made a little bit of noise also. We are very excited about what's going on here, in particular with Dubai and the UAE, the efforts of innovation. That they have significant impact globally from the ambitions of leading with technology. That means also leading with the financial investment and financial investment in infrastructure in particular, that they are very significant in this area. So therefore, our full attention, and this is why I think we are very active here and continue to be active. We are kind of on all levels, right? We made this eFront acquisition a couple of years ago, so we got even closer to the GPs and LPs, which were not exactly into where we originally we've been focused with our asset manager kind of core offerings, and suddenly our whole portfolio view, it's very relevant for what's going on here, and that's the way that we are going to continue offering our clients in the region and grow with them into the future.
It'll be remiss of me not to ask you this, but what is your assets under management target for the region for this year? Do you have those numbers?
I don't think that we are going to put a target. As you can see, we are very much focused on opportunities. And this region in particular, I think it will be very, not serious to put targets when basically we've seen people that they are putting, targets of $7 trillion of investment, that some of them, they might be very relevant for that particular region. So it's more betting that we typically do at Blackrock.
Sky's the limit, in other words. That's great. Siobhan, we want to talk about the technological side of things, and you guys are focused on this quite extensively, and you mentioned that one of the risks, clearly, just you've got, huge advancements happening. It's happening at a rapid pace. You've got to keep up. And I guess the question is, are financial institutions, are banks, is the FinTech space able to adapt and become agile enough to deal with this rapidly changing world?
So yeah, I would say banks are absolutely able to adapt. I think it's just a matter of how you approach it, as in anything, right? One, it's recognizing the need to adapt, and then planning for that, forward-focused really on how are you going to select the right technology strategy that's going to allow you not just meet tomorrow's demand, but well into the future. And I think that's a key aspect, is how do you plan for that future? You know, we're really embracing open. For us, we believe finance is open. We heard a little bit of discussion about that from one of the previous panelists in terms of embracing the ecosystem and what fintechs can bring. And I think it's really important to do that. I think it's, you know, when you look at Dubai, when you look at Vision 2030, when you take a look at where that's going, that's really what it's all about. It's about looking to the future. It's about how do you embrace, how do you set the strategy, but then, you know, part of it is culture, part of it's figuring out the right technology, the pace at which to adapt it. And I think we see that change happening. We see that change happening in Dubai, but we also see it happening globally. But I think Dubai...
This is the place to be, basically, you're saying. Dubai is one of the most important markets for technological advancement.
Absolutely. What we are seeing is that the pace of change and adoption or engagement is, you know, Dubai is a leader at the moment, and we see that in a couple of ways. If you think about non-cash payments, for instance, Dubai is about 73%, and that's up from about 39% 5 years ago. If you take a look at Finastra State of the Nation, where we survey our customers, and in there, for instance, you know, a couple of things to call out would be banking as a service. About 49% of banks here are actually have it deployed or are improving their banking as a service strategy. And that's significant. Again, outpacing the global average that we're seeing.
Jim, I'd like for you to jump in here. Do you agree with that? I mean, are you seeing this kind of trajectory in the region? And is Dubai standing out for you as one of the places within the GCC that is able to leapfrog, frankly?
Yes, for sure. And we've been operating in the region, in the UAE, since the early 1960s. We got our banking license in 1972, so we've been around for a while. We continue to invest. I'm proud to say, year to date, we're the #1 IPO bank in Dubai and the #1 M&A advisor in the region. So it's something we have a lot of commitment to and will continue to do so. And it comes from the top. Our chief executive, Brian Moynihan, visits the region frequently, and last year met with His Royal Highness Sheikh Mohammed. So it's an exciting region, and the capital flows continue to come to the region, which makes it very exciting for us.
Kfir, I see you agreeing there. Yeah?
Absolutely. We kind of see the same direction as I mentioned earlier in your question, yeah?
So I want to let's talk about the technological side of things as well as what we're doing, what we're seeing in Blackrock in particular with generative AI and how you've been able to bring that not only to your workforce, but also to your clients' tools that are available. How has this innovation changed the way you operate?
I think, you know, we started a journey about 6 years ago. I opened our AI labs, and it was mostly focused on machine learning and how we solve complex problems that we are seeing. Some of these complex problems, they had to do with how do we touch data, and you know, every night we're seeing about 2 billion data points related to the risks of everything that is trading in the world, and into all the markets we take all this data, and if you apply the best I don't know, quality engineering on that, say a Six Sigma apparatus, you're going to still stay with 500,000 mistakes in your hand. We don't like this kind of amount of mistakes, so we were looking of how to improve this thing. So machine learning was cool and took us to a lot of way into it, in particular to this capability of, if you want, capability to not to compute, but to impute data in order to have a better quality control for everything that we were doing. That was awesome. More of the things, a lot of automation, you know, a lot of capabilities to create alpha. But then generative AI indeed hit, and it's a total different game. And we need to be right now focused on how we put that into the game. So certainly the first thing was to introduce that into our own environments. And we kind of 100% implemented that inside Blackrock. We've been quite shocked that we've been one of the pioneers, not only on financial systems, but in the whole market to kind of go first with this kind of tools in production. But then, you know, when it comes to any kind of, say, our flagship FinTech software, Aladdin, certainly our clients, they expect a level of AI to be introduced into that, so we're working into this right now. And then we're working into how to put that on the business layer inside Blackrock. These kind of things are a little bit more complex. There is a lot of misunderstanding and a lot of, there is not exactly an art yet about what is right about, you know, hallucination, what it's, you know, how to implement a model that will be 100% safe for what you're doing with AI. So, you know, this is kind of working process, and we're progressing with that, but slowly and carefully.
Yeah, really interesting. I mean, you're saying you're pioneer in the space, frankly. So I guess everyone's going to be looking to see what works for you and what didn't, and what mistakes were made along the way. But I'm curious in terms of how it's helping you manage risk better. You mentioned Aladdin and, you know, eFront as well as the other system that you have. How is it helping you manage risk?
The AI itself?
Yeah. I mean, is it making an impact?
You know, it's very difficult to say that, right? So right now, you know, AI itself is, you know, people are looking at that from the productivity point of view. When it comes to calculations, it's still not good. It's about 20% wrong. So in financial systems, when something is 20% wrong, you don't want to touch this. On the qualitative side, it's much better. So therefore, you need to look into how to use the qualitative capabilities of AI and how to start improving the quantitative capabilities of it. When you're going to get par with them, you will be able to tackle the progress right. So right now, you know, we're looking into directions that they are more connected to the metadata. So in the moment that you're going to have more capabilities to touch the metadata, you're going to be able to be better with qualitative things. To the quantitative things, and then we'll be able to complete that. For now, it's more a game of efficiency. And this is kind of, it's not exactly on the investment or on risk management that this helps right now. It's more helps, you know, if you're looking into your workforce and, you know, you're looking with 50% of the upper 50% of your upper workforce will give you, I don't know, 17% more productivity, while the lower 50 percentile will give you something like 50% more productivity, so, or 40% more productivity and so on. So therefore, it's a huge opportunity to kind of get more productive workforce. So if that workforce, you know, has this, you know, it's part of what you're doing with everything else that you're managing, so that's how you're getting the improvement right now. Anything else, it will be too speculative to put numbers on it.
I mean, really interesting. Just to hear you breaking it down like that, I guess, you know, I think the big question is how AI, generative AI, sort of these technological advancements, Siobhan, are going to be permeating the industry and how they can be put to practical use, and of course, how to use them. Can they help mitigate financial risks, or, you know, how more efficient we can become through them? And then, of course, the mistakes along the way. Mm-hmm. How would you describe that space right now?
Well, I would say it is a very flexible and challenging space, filled with opportunity. You know, I think as with any technology changes, there are benefits, but it is about finding the right pace, managing the risk. You know, the same applies whether we talk about cloud adoption, whether we talk about generative AI. I mean, there are risks, some of which are perceived risks, some of which are actual risks that have to be worked through. And I think one of the things with generative AI is there's definitely opportunity for organizations to adopt and to see some benefits, whether initially it's about cost reduction or improving the workforce capacity, for instance, by taking off some of the tasks. I mean, one of the first things we've seen is organizations really adopting it in certain ways, whether it's around customer support or knowledge tools to, you know, really get their feet wet, so to speak, and actually test that out before they build it into products and before they put it in other areas.
How does the regulatory environment affect the ability of financial institutions to be able to adopt these new technologies?
So I would say the regulatory environment can have a significant impact and
hold it back as well, right?
It can, but it's about checks and balances, right? I mean, it's really, the regulator is there for a reason. If you think about it from a cloud perspective, we see that come into play where some countries have approved, you know, cloud. Others are not yet there, or they haven't finalized their policy, and so that is an area that you could say can hold banks back. Now, at the same time, I would say from a fintech perspective, a lot of the fintechs aren't today under the same regulatory requirements that the banks are. And I think the regulators will catch up to that, and they will find that they have to will have to change and be forced to operate in and under more regulations as time progresses.
Jim, backstage, we had a big conversation about this, right? About legacy, banking sector, and go, well, these are, you know, legacy systems, and, you know, can they really evolve? This is why the fintech space is so exciting. But this is the thing, they have to be regulated at some point. I mean, you know, they have to be held to the same rules and same, you know, the same standard. I want you to give me a sense of what you guys are doing and whether you're adapting and adopting a lot more technology and changes, and importantly, working with fintechs to shore up that part of your business.
Yeah, first of all, I think major banks like Bank of America are indeed major technology companies on our own. We spent $12 billion on technology last year. $3.8 billion was on new initiative technologies. And we don't do it all on our own. We're working with the fintech ecosystem. We're working with infrastructure partners like NASDAQ. And we are also developing our own technology. And so we are technology companies. Bank of America has been using AI since well before AI became such a popular terminology in our digital assistant in the US called Erica. And it was rolled out many years ago, and it's basically facilitates consumers to have queries, help them online with savings, budgeting, et cetera. Since we rolled it out 5 years ago, we've had 50,000 upgrades to that system. And so, and again, we work with a number of partners on that. And I don't think it's really a fintech versus banking debate, although as Nick at Julius Baer said a few years ago, people were telling him he was going to be obsolete in 3 years. Okay. I don't think it's about that. It's more about working together. And your point on regulation is one of the advantages of big financial institutions like Bank of America is that we're very used to dealing with regulators. And as Siobhan said, regulation is coming to fintechs. And that's a skill that we can deal with in terms of dealing with regulators.
Yeah. I want to take a step back and really talk about the macro scenarios that are playing out. I mean, if I sort of refer to some of the interviews that I have, and a lot of them in many emerging markets, you know, they talk about whether, you know, the US dollar still maintains that strength globally. We know it's still the dominant currency. We know the global south is starting to get a greater voice. This region is starting to think very differently about how it entrenches its footprint on the global stage. And I think that with these conversations that are being had, we've seen the rise of cryptocurrencies. And Kfir, I want to talk to you about your Bitcoin ETF. And perhaps many of you know this, but it hit $10 billion faster than any other ETF in US history. So Kfir, what does it tell us about demand and maturity within this space, just seeing how well this ETF at Blackrock has performed?
It's about, you know, the technology at the right timing. I think many years ago, I did the first presentation to our management about what this crypto, it's all about mining, about the whole ecosystem. And, you know, because of my background in technology, you know, and my interest in cryptography related to that, it was almost like a science project. And I didn't believe in it so much for what we're doing. We're in serious business and we are fiduciary, and it did not match. Couple of years later, you know, we started doing more, and certainly with blockchain, it was very interesting, but then blockchain...
Become too big for you to ignore it?
No, it's again, it's a development in time. Then we've seen blockchain being, you know, the Interpol, they breached blockchain. So, you know, that's not a technology that we are very much interested around it. And then also think about it, from where we're coming into the game, we're an asset manager. We work with, you know, companies that they are doing custody for us, and there are not a lot of them. So therefore, the whole beauty of distributed ledger, it's not so much relevant for me, because if I have a couple of people that they are doing my custody, I just can put a line between me and them and run them on a typical, you know, database. And then, you know, this interest came for clients. Clients are very important for us. Everything we're doing, you know, it's all coming from clients. I wish I knew. I know the Chief Innovation Officer of Amazon mentioned that 70% of their ideas came from clients. I don't have that percentage for us, unfortunately, because I'm doing this function relatively in the last year, so I did not start calculating the last 36 years, but a lot of the things that we're doing, they are coming from clients. And clients came with this requirement to have an exposure to crypto assets. And we originally were very skeptical, and then we decided that we're going to do a very little amount of percentage of portfolio of clients with that kind of exposure. And in the moment that this idea of the spot, you know, Bitcoin came into the game, it was more interesting for us. We started playing with that. We had the right technology and wallets in place. Not without challenges, right? Because there are challenges that they are less typical for us. In particular, I think, you know, Ms. Friedman explained earlier about all kind of, you know, cybersecurity things that they might come into the game, and that particular area has way more exposure of cybersecurity than what we might like. And how do you deal with that? And it comes in all kind of layers in between. That they are a little bit more complicated that typically we would like to deal with. So after we basically put all these things together, we've been ready for this thing. And indeed, it hit hard. It hit very nice for us.
Surprised?
You know, I don't think the team was surprised. I think the only interesting thing I heard about it was from our CMO, actually, on the side discussion that we have, that if he knew the amount of interest that is going to come from the other participants into the whole game, he would invest less money on marketing for that particular effort because it was so big. That was a very interesting point.
Yeah, that's really interesting. I want Jim and Siobhan to jump in here as well. Jim, I know you're interested mostly in the underlying technology, so blockchain, but I'm curious, listening to what Kfir just laid out as to why this is still a fascinating space. And may I remind everyone, the market cap of crypto right now is $2.5 trillion. So it's, I guess, getting too big to ignore in many ways. But what is your stance at Bank of America with regards to this sector?
Well, it is a major asset class, has become one. However, I think for global systematic banks, I think it's very difficult to embrace true cryptocurrencies, and we do a de minimis amount of activity. However, central bank digital currencies, which are all going to be developing in the coming years, I think will change.
That's still backed by the US dollar, you know, so it's a digital currency.
Or in the UAE or other countries, you know, and so that is of interest, and I think that will find itself more in the mainstream banking industry versus cryptocurrencies. What I would say is, as you said, we do embrace blockchain technology, distributed ledger technology. Since 2021, we've been using blockchain technology in certain settlement systems that we do on the institutional side of our business, and it has the ability to create more security and transparency. Bank of America has 6,600 patents. We did 644 last year, and about 40 of those were related to blockchain and distributed ledger technology. So that is an investment that we and the industry, I think, will continue to make.
Okay, Siobhan, your sense, you're not into the crypto space, obviously the technology side of things. And Kfir mentioned something really interesting in terms of the cybersecurity risks that come with anything to do with crypto.
Yep.
How are you reading into what we just heard?
So I would say, I mean, from a crypto perspective, it's something that we're not seeing quite the demand from our customers for our solutions to have crypto sort of embedded in them. You know, is security and cybersecurity a risk and something that is of constant concern and tied to crypto? Absolutely. I would say that how we are moving forward is continuing to look at the trends, look at our customers and what they are asking us to support them in, as well as making sure that, again, it aligns to the regulatory requirements or how the regulator is viewing that. And then looking at the ecosystem. For us, you know, finance is open, and we look at the fintechs also to be able to augment not only our solutions, but our customers and the banks, you know, their needs as well. So we look at a combined ecosystem to solve the solutions as well.
So Kfir, are you seeing something that, you know, Siobhan and Jim are not seeing? And do you think, I mean, they mentioned the risks and they're talking about what's, you know, what works for them at their respective banks. But clearly there's something that's working for you within this crypto space. And do you think that any institutions that's not taking it seriously and coming up with solutions might be missing out on a really good opportunity here?
Oh, no, I cannot say this because, you know, a couple of years ago when people, they were trying to explain how much we're missing on that, you know, it's about, you know, these are serious institutions, you know, BofA, it's a huge partner and client of ours, so it's a very serious place, and, you know, and certainly, you know, it's about, as I mentioned before, it's about timing and about what is right for you at the right time. You know, I think that right now we can see a couple of more things with crypto coming up from us. We have some, you know, very ambitious, you know, targets coming in different kind of directions in the crypto space. If you were asking me again a couple of years ago, I would not think about it, but it just works for us in that direction, and it's just one of many others. But for some reason, because of the, you know, the you know, immediately stick that it created, it's kind of the impulse function of the growth of it.
Oh, watching so closely, yeah. Siobhan, you're smiling.
I was going to say, I think it really comes down to priorities. Right? Yeah. You know, it's not that we don't do anything there, but for example, it's where are the banks in their transformation on the technology journey to be able to actually support some of the other aspects, you know, such as cloud. You know, if you look at core banking systems, for instance, where are they with that? Is it cloud, or is it, you know, do they have the open capabilities or not today? So, you know, if you look at it, it really comes down to priorities and how much can you take on at any one time.
Absolutely. Okay. So we've got about a couple of minutes left. I want to wrap up by talking about where would you, what are the most exciting sectors for you right now? In a world of incredible uncertainty, we all know what those are. So Jim, let's start with you.
Well, it's a very expensive question,
it is.
but because there's so much in the world to focus on. I think energy transition is obviously.
I was going to say, is ESG investing dead?
I don't think it's dead. We still have our same ESG targets of $1.5 trillion of sustainable finance by 2030, and we haven't changed that, and we'll continue to do that. But energy transition is a mega topic, and it can mean a lot of different things in different regions. But I would, of many topics I could point to, I'd point to energy transition.
Okay, yeah, energy transition, absolutely vital specifically for this region. Kfir.
I think for me personally right now, the most exciting thing and the unlock for a lot of things for us, it's how do we put the data, not to be kind of the cart in front of the AI, but to kind of have the data set in a way that AI can hit the right sets of data and we can get the right outcomes, so we can get all the beautiful things that you were asking about, like investments and all kinds of other things. Investment, it's one of our pillars for development with AI, and we cannot do it otherwise than we're not unlocking the data for the AI first.
Brilliant. Siobhan.
Well, unsurprisingly, I'm going to say technology and innovation is the most exciting for me. And really, I think it's the opportunity to help our customers, but also to meet that end customer. Like the consumer is changing and driving change within the whole world, not just financial services, at a pace that I don't think we've ever seen before. And for me, to be a part of that is phenomenally exciting.
Fantastic. A big round of applause for our fantastic panelists today. Thank you so much for your insights and wisdom, and hope to see you soon.